following presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.
All right, we are back, everybody. This is NinjaTrader Live. My name is Jim Cagnina. Joining us from somewhere near Chicago, Illinois, the incredible Dan Gramza. Gramza, wait a second. I'm going to get this right. Gramza Capital Management. Did I say that right?
Yes, you did. How are you, Jim? Good to see you.
I'm pretty good. I am pretty good. Still learning how to be a Southerner with, weather management, the yard, and all that stuff. But no, other than that, I'm doing really good. I hear you guys have some maybe not so great weather up there in Chicago.
It's gonna get a little cool. Today it's supposed to really drop like 17 degrees and wind chill in the negative numbers potential.
Ooh.
But tis this part of the country, and we've been very lucky. Look at December, and we don't have any accumulation yet of snow, and I should not say that because that means it's really going to come. It's just a matter of when, right?
So is it a La Nina year, or I can't remember?
Well, it's supposed to be a transition, so we're seeing theoretically this part of the country should be a little bit warmer. Although it's not warmer today, and we should see that difference in crops. And although globally things don't look too bad, except Russia and Ukraine, they have some challenges when it comes to wheat right now. But other than that,
let's talk about that. We had Sterling Smith on. Did you know Sterling? Have you ever met Sterling Smith?
No, I haven't.
Okay, He's a long time commodity broker, super knowledgeable. He was talking about wheat and some of the troubles that we have going on there. We had the WASD report yesterday, which had a little bit of surprise in corn, but not in wheat. So what are the challenges going on now with that? With obviously the war, but
well, it is the transportation issues for Ukraine in terms of moving their product. And in Russia, their yields aren't what people were expecting. That's an issue. They're a major supplier. And how much they're supplying is debatable right now. So I think that's being reflected in the numbers that we're seeing. So we have high expectation. And if you look at stay in that complex. If you look at soybeans, then we look south to Brazil and Argentina, and their crops right now look pretty good. So that has some dampening effects on soybeans right now. I think that's something we want to be sensitive to in terms of how their product, how their growth is going. Brazil is now the world's largest exporter of soybeans. And then the other issue is China. It always seems when it comes to commodities, they're there in some way because of their consumption. That's why there's so much focus on what they do.
Yeah, speaking of commodities in China, the OPEC monthly report came out this morning or last night. I can't remember the exact timing of it, but they've cut their 2024 and 2025 global oil demand forecast quite a bit.
Yeah, they have, and I think it makes sense. And that does go back to China's consumption. They have announced they're going to have a looser monetary policy to help stimulate their economy. But the bottom line, it just has not come back from where it was pre-pandemic. The expectation is just going to start up again. It hasn't done that. And because they are such a large consumer and or processor, we want to remember they process about 48% of copper globally. So they're a player there as well as, consuming over 50%. So a lot of people connect China to copper, but it is the reality in terms of consumption. That demand is needed to really drive that market. And we're just not seeing that now.
So, do they have a population problem, a demographic problem in China, like Japan did?
Well, they do longer term. Their policy of limiting, how many people, how many children you can have is now statistically coming back to really bite them. So they are. There are some challenges there. They were counting on real estate to be the driver of their
Mm.
economy, which it was for a while, right? But you and I've seen pictures of empty buildings there.
Yeah.
And so that formula just doesn't work.
Well,
So
speaking of housing, pivoting over to today's CPI report, I know this is an awkward transition, but the rent number, the equivalent rent number, actually was kind of unchanged for the first time for many months.
that is interesting, isn't it? And if we
Yeah.
think about what's driving it, and one of it is people aren't moving, I don't think, as much as we've seen in the past. So they're staying where they are. And if you look at a lot of landlords, do they want a stable population? Do they feel there's enough transition that they can raise rents? I think there's that um, back and forth when it comes to that supply demand situation, and we're seeing it reflected to the in that. Excuse me.
Yeah, it's funny you should say that. Real boots on the ground experience. Offspring number two out in Arizona, he actually benefited from a lower lease for the
Wow.
first time in 4 years. Yeah,
Wow. That says a lot, doesn't it? And especially in Arizona, where
yeah,
rent demand could be fairly consistent and you would expect an increase. Wow,
yeah,
that's very interesting, Jim. I
yeah. So,
yeah. Hmm.
but the Tucson area supposedly is pretty hot right now for new development.
Hmm. Well, that's the other issue. What is a supply situation? And
Yeah,
that does drive that. I mean, we see it in other countries too. If you look at Australia, for years, and I think it's still the situation, the people I deal with there, that housing really is tight. The supply is tight. And last time I was in Melbourne, which is a few years, well, 2019, the year of the pandemic, the building there is amazing. What
yeah.
they've done the last 10, 15 years, it's incredible, but it's still not enough. I mean, if you look at Sydney and other areas, they still have demand that's not being met. It's a big
Yeah.
challenge for their government.
So, okay, so going back to our CPI numbers, though, it was pretty much hit expectations, right? The
Yep.
numbers weren't out of whack by the
No,
consensus numbers, just the headline and the core. It's still though kind of sideways, right? Where it's like we're in the red zone trying to score a touchdown. It's harder and harder to get into the end zone the closer you get, and that seems to be going on here with those CPI numbers.
I think that's an excellent analogy. You're right. That is where we are, Jim. We're not seeing anything scary. We are seeing what's estimated by the economists, so we're in line in that regard. It does say something about expectations. So if you look at the markets today, are they moving because something specific has happened other than that number? And what does it do? It translates to anticipation, right? People are going to
Yeah.
be anticipating now that the Fed's going to lower that interest rate, that the Fed funds rate going to come down by 25 basis points. Uh, and there's a high probability now they can justify doing that. So I think that what the Fed has done so far is reasonable, which I'm happy about. And they also frame it in a consistent way lately in terms of, depending on the numbers, we can see things changing. So their attitude has changed a little bit too, it seems, in terms of the type of expectation the market's looking for. And if we think about it, we know that 2% is the magic number that they want for inflation, and about 3.5% is the ideal Fed funds rate theoretically. So, we'll see
Yeah.
how it develops, but we're seeing it in yields when it comes to interest rate markets. We're seeing the US dollar remaining strong. It creates flows. People outside our country are bringing money here, capital flows here. And the result is that dollar stays strong. That's one of the drivers behind that. So it's
So,
it's really an interesting puzzle.
well, the Fed funds tool, the CME's Fed funds futures markets, they have that tool that they publish probabilities for rate cuts. And it's been probably the most rational we've seen it in a couple of years, right? The last couple of years, it was all about the Fed. What's going Fed going to do? What are they going to do? What are they going to do? Now it seems like, all right, we have three more 25 basis point cuts before this cycle is over. It gets us to about 3.75 at the Fed funds level. And then we're done. And it's kind of a consistent, normal looking profile from that probability table. And now it seems like, all right, the focus is not on that anymore. Let's do something else.
Well, on what other things are you referring to?
Well, we're referring to I'm referring to the debt, right? Our
Oh, okay.
borrowing.
Okay.
The possible change in tax structure, the possible changes in tariffs. Those are the things now that I think people like us are going to be talking about more than is what's going to happen with Fed funds rate.
Totally agree. I think a market attention is going to be shifting to those other things, especially the tariff side. What is the impact? Is it really going to happen? Is it a negotiation tool or is it reality? I mean,
Yeah.
it does put people on alert if they know the potential for tariffs is coming. Trudeau came down and visited Trump. Didn't change much in terms of the conversation, but it did create that anticipation, that expectation, and the impact it may have on their economy. So if nothing else, it is a negotiating tool, but you know, remains to be seen what really gets implemented. And the thing about tariffs to me, Jim, is that there are ways that countries step around them. We can have tariffs. Do they have an impact? Yes. But is it all the product? It's like sanctions. I mean, if you look, sanctions aren't tight, really. If you look at tariffs, and United States has had tariffs on Chinese steel since Reagan. Uh, George H. was the only president that didn't have tariffs on Chinese steel. All right, so if you're China, what do you do about that? One thing you could do is you could send your steel to Vietnam. Vietnam looks at it and goes, oh, that's steel, and they stamp it. Now it's Vietnamese steel. We can buy Vietnamese steel.
So it's
So,
like they're acting as a broker in that sense.
oh, yes, yes. Other countries act. Uzbekistan, when it comes to crude oil from Russia, we have sanctions on them. We're talking about tightening them more. Does it have an impact? Yes. Is it truly sealed off? No, it's not. If you look at how energy flows, it's changed in our world. So does Russia nat gas and crude flow to Europe? No, it's changed. But if it goes to Uzbekistan and we buy crude oil from Uzbekistan, that's Russian crude. And the tricky bit is, it's hard to identify origin in a product like that. And when it gets refined, it's anybody's guess. So they do have an impact, but it's
So when there's a middleman like that, usually when there's a middle, I'm using the word middleman, broker, whatever, so, intermediary, that they take a chunk out of the middle, so that causes this asset to be priced higher, right?
sure, they're going to get paid to do that, but excuse me, even see, it chokes me up as you and I explore this, but even a little bit on high volume, it doesn't necessarily have a dramatic impact.
That makes sense. That makes sense. So let's pivot to the equity world for a second.
Okay.
S&P 500. I mean, this has been a pretty extraordinary rally. And is it over yet or no? We still got a lot of room to the upside.
Oh, I think there's cash on the sidelines that haven't been implemented in this market. It's going to stop when we get high enough to really find sellers coming into this market. And so far, we really haven't seen that. We see some profit taking. We had CPI coming out yesterday. As I was looking at this, I felt it was 50-50. I mean, the bias is for a move to the upside, but when a number hits the street, it's 50-50 in terms of how the market's going to react. We can only anticipate so much. Now, this number came out as expected. So the market's relieved. So it's anticipating. That's an anticipation move that we're seeing here. Everybody really, has a breath of relief. And now, okay, what's going to drive this market? Well, we got PPI coming out. We
Yeah.
have Fed next Wednesday actually doing something regarding interest rates. So there are some tangible things that we can look at that may maintain or not this momentum that we're seeing here.
That's right. That's right. So PPI tomorrow, Fed next week, with 25% baked in the cake, maybe, right? So this is, usually when the Fed funds tool at the CME is in the 90s during the quiet period before Fed meeting, that's what it is, right? So I think everyone feels it's baked in the cake, which means if that's true, then the messaging is going to be the next important thing.
That's right. I think you're right. What's the tone that they set? So they can decrease it, and then people are going to be waiting for what did they say afterwards? What did they
Right.
leave the market with, right? That we're
Yep.
going to continue this track unless we see data that shows us something different. And right now, that's probably what they'll focus on, I think.
Yeah, and they have I think this is a meeting where they're going to release the summary of economic projections. They do that every other meeting. And what amazes me about that, that's a great report, by the way, for the dot plots, they call it.
Mhm.
But what really amazes me is that you could have two different FOMC presidents 200 basis points apart on their predictions.
It is. It is. And I like that. I like it showing up there. I don't like it when they go out and talk about it. I think they should follow the Fed policy at that point when they talk about it. But to express their point of view, I think that's healthy. And what's happening in their region that they look at, that the data they get, that may be a very accurate assessment from their point of view.
Yeah.
So I like that difference, but you're right. It can be. It can be. But then you figure it's really what the committee comes up with that's going to matter. So if you and I could be 200 basis points apart, at the end, it's what comes out in the wash, right? What does happen from the Fed, even though this
Yeah.
tells us that they're not marching to the same beat of the drum.
Yeah, I mean the votes are usually close to unanimous, right? They're not always unanimous. They are. I mean, in England, the Bank of England, they're usually not unanimous, and then they'll tell you who said what, right? They'll tell
Yeah.
you who voted
Yeah.
what the day of. We don't do that in at the FOMC.
That's right. That's right. And I don't think it's necessary to do that. actually. It's fine either way. But I don't think it's necessary to reveal that. And the reason I feel that way is that it's the result of the action. When the Fed speaks, it should be with one voice.
Yeah.
And so you could say there's dissension, that there's not a full agreement.
Yeah.
But to say who and where, I don't know if there's anything to be gained by that.
By all accounts, by most accounts, Chair Powell's done a good job of getting consensus.
I think so. I
Yeah.
think you're right.
Yeah. Well, anyway, all right, we'll see what happens with the stock index futures. I'm going to pull up a chart, Dan, if you could see this. This is the 30-year Treasury bond chart. And I'll try to pull in some more data. Kevin, if we could see this. Oopsie, I just lost all my screens. Okay, let me get this straightened out here. Hang on a second. Bear with me, Dan.
No problem.
And I'm doing the 30-year only because it's the longest end that we really could analyze pretty good. This has been an interesting, and I'll go all the way. My data goes back to the end of 2023. So that's what I'm looking at right here on this. And this is a daily candle, Dan. I'm surprised at this difficulty in, well, first of all, this move down surprised me. The magnitude of this move down surprised me a lot, right? We got all the way down to 115 handle. A few years ago, we were at 175 handle.
Yes.
Why are we having a hard time retracing back up?
I think right now we're at value. Look at your chart and look at the highs and the lows and look at the middle of the chart. Where have we spent most of the time? At the extremes? Not too much. If we look at right where we are, this range that we're in right now, and go back, looking through this chart, we spent a lot of time at this area. It's somewhat, I consider, fair value. So
let me do this, Dan. Let me just draw a rectangle here.
Okay.
At the risk of messing up my whole chart here, let me just kind of. This is what you're focusing on, right?
Yes. Oh, that's really good, Jim. I like that. But yes, that's good.
I'm good at drawing rectangles, Dan.
You are, and it's nice. Like in this example, it's a great way to get a feel for what does this market consider value. What causes markets to move? It's perception of value. Is it cheap? Is it expensive? When we're at those extremes, which you're right, it was way up there, that wasn't cheap. If we look at the lows here, all the way down to what we saw a few months ago, that was pretty cheap on this chart. And where we are now, it's really at value. It's the way I look at it. So to go sideways here wouldn't be surprising, but right now with yields going up a bit, you look for continued downward pressure. But we also see some references here where we found buyers, before.
So maybe the Fed funds rate cuts aren't impacting this as much.
Correct. But we also have inflation also calming down. We have other numbers, economic numbers that have, I wouldn't say come into balance, but the volatility and the market focus has also calmed down a bit too.
Yeah, that makes sense.
So we're in a different market environment right now than we were just a few months ago.
Got it. Well, I know you have a techie part of you, so I want to shoot. I don't want to call you kind of nerdy or dorky, but you have this technical side of you that is awesome. And so I want to move over to the Bitcoin for a second.
Sure.
And we had that new chip released by Alphabet. Supposedly this super duper chip. Did you read about that?
Yes, it could be a game changer. It's truly remarkable. And quantum computing, it fascinates me, Jim, because of the capabilities of what it can do, not only from a market point of view, but from weather and medical applications and things that we have questions on that we haven't been able to solve. So it's going to be a new area, exciting area, I think. But I'm sorry, what were you going to say
Yeah,
about
no,
Bitcoin
no.
here?
It's interesting what you're. Yeah, it's interesting how you're kind of giving me a global, a bigger picture of the applications for this. I was going to be a little tongue in cheek with the idea that, okay, so now we're going to be able to mine all the remaining Bitcoin in like 5 minutes.
That's right. We do have a limit of what we have here. And if we have the people participating, as it looks like it is, and again, what are we looking at here? We're looking at high expectations. We're looking at high anticipation. So this is that kind of market. This is not a supply demand market. However, you are right. There is a limit to how many coins can be mined. And maybe it does speed up that process. Wouldn't be surprised. Since we've had the ETF launched, that I think was a game changer here. Because to get the ETF launched, and a lot of people are lined up to do it, it says something about market acceptance. And it also says something about regulator acceptance. And, where does crypto fit in? And, we've seen some countries that have created product that hasn't gone anyplace. I mean, look at Venezuela. Venezuela said, okay, we're going to have a cryptocurrency. And that was when Trump had his first go around. And what did he say then? No one can trade it.
Yeah.
And so did it go anywhere? No, not
No.
really. So it's a interesting tool of what's going on. And our central bank, our government is looking at it as they should. Does it fit in? Is it a reasonable thing? But this right here is all based on perception. It's not a supply demand issue here.
Yeah.
You know,
Well,
it's
yeah, yeah. I mean, if I'm, we're up 5% or something like that today, one day,
yeah,
5%. That's a big
yeah,
move. I mean, if
it
I'm selling
is.
cannoli, if I'm selling cannolis, I can't be, you can't pay me in Bitcoin because I have to keep raising and lowering my prices every 5 minutes.
You got a point there. Where does it fit into an economic system? Is it a tool we can lean against in that regard? And I think it's one of the reasons you don't see our central bank jumping on it too
Yeah.
much yet,
Yeah.
because that's a
Um,
tricky part.
yeah. So, Dan, we're up against time, but I did promise Engineer Bear, who's in our chat, that I would ask you about cocoa.
Oh,
You're going to be
cocoa.
one of the few guys on
Oh,
the planet that are going to be able to talk
oh,
about this.
oh, cocoa is so interesting. Coffee is interesting too, but cocoa, it's an amazing product in terms of where it is right now. There's concerns. I mean, if you look at cocoa's interesting because it only grows in a band around the equator. So if you look at the world and you look where cocoa production is, we have some in South America, but really the focus is Ivory Coast and Ghana. And a few years ago, I taught a course on technical strategies in Ghana for the Ghanaian government. And they had, they not only do they produce cocoa, they're a major supplier of cocoa, but also gold and crude oil. And the issue was, their currency, going back and forth to the dollar, cocoa's based in dollars. Also, their system in Ghana is different than what you have with Ivory Coast. And it's interesting when you look at this kind of product where the government fits in. There, the cocoa board pays the farmer and hopefully pays them a fair amount for cocoa. In Ivory Coast, the cocoa producer deals with the marketplace. And the idea in Ghana was to make it fair, to make sure that farmers could survive by
Yeah.
them, providing an income, a stable income. And there's a debate about which one's better. But cocoa's going through some challenges right now, just from production. And so it's going to be interesting to see it where it comes out. What's also interesting, although this is probably more detail we need to talk about, but not all cocoa's the same. The cocoa they grow in Ghana, which they feel is the top cocoa, is because it's a hybrid. They've used some from South America along with what they had, and they've come up with a variety that they feel is top quality. So there's also a little difference when it comes to cocoa, although we think of it as a broad market.
So we're going to have to continue this conversation another time. I have a lot of questions for you on this,
Oh.
but we are up against time, Dan, and yeah, and I greatly appreciate you being here with us today, leading into the holidays. I'm sure you're going to have some wonderful plans for the holidays.
We do, and I hope the same for you and your family. I know you have a lot going on the home front with family, and that's terrific. So Merry Christmas, Happy New Year to everyone watching, actually. Happy holidays, and look forward to our paths crossing again in the future.
All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.